So we're going to add another term to your ever-expanding financial vocabulary today, and that is the word redemption. And how does it apply in these private credit management, special purpose vehicle deals that are being put together in massive amounts to fund all sorts of businesses, industries, from auto parts, but all the way through and covering the AI data center build out. So redemption, all right? So what is redemption real quickly? It's when you tell the fund, okay, and we're going to cover two stories today. One hit this morning from Financial Times involving Blue Owl fund and what they're doing and how it's forced their investors to basically to take a huge hit right off the bat. So redemption is when you tell the fund, right, you invest some money, you tell the fund, okay, I want my money back, okay? The fund, if they honor your redemption, they take your shares and they pay you cash back based upon, they call it NAV or net asset value, okay? But let me dig in, let me reveal what's going on, and then we'll back into why it is a disaster. That's the reason for the thumbnail title today, that the exit doors are sealed. I'm going to tell you what Blue Owl did. Blue Owl, by the way, is in a partnership with Meta. They are doing a $30 billion data center in rural Louisiana. Meta's going to split ownership of the Hyperion data center site in Richland Parish, Louisiana, with Blue Owl Capital. Meta will retain a 20% stake in the venture. Bloomberg reported. This is a story that goes back to October of this year, okay? And guess who provided the funding for this $30 billion financing deal? None other than Morgan Stanley. Arranged $27 billion in debt and $2.5 billion of equity into, we've heard this term before, I've been covering the last couple shows, special purpose vehicle, SPV, okay? So Blue Owl is in a joint venture with Meta. We know what Meta is and how big they are and how committed they are to this AI data center build out. So I'll jump into the story from Financial Times today that shows what's happening with Blue Owl and redemptions. And keep an eye on this. It's going to start with Blue Owl and it's going to expand, okay? You aren't even being told by the mainstream media how much of this or how many of these redemptions now are coming to the surface. And what happens when the investors want their money back all at once? Guess what? The exit doors are sealed. There's not enough, let's say, room for everybody to get out and get their money back. And they're getting burned and it's going to get worse. So before I jump into the story on Blue Owl, as I always humbly ask, please subscribe to the channel. Guys, if you're not subscribed, so we can keep growing the community. Welcome to all the new subscribers over the past couple of weeks. And of course, all those that have been around since the beginning. I appreciate all of you. So why does it matter? Redemptions, in theory, sound simple, but in private credit, REITs and other funds, a lot of like we call illiquid type vehicles, they're not guaranteed. And this is where the investors can get burned, okay? So let me explain to you what Blue Owl just came out this morning and announced. And this is just the tip of the iceberg, all right? Blue Owl announced that their private credit fund, Blue Owl Capital Corporation 2, BOCC2, a $1 billion fund targeting retail and wealth investors. We discussed on a show a couple days ago that these funds are targeting not just pension funds, not just life insurance companies and big players, but also private individuals that have money, private wealth funds. So the $1 billion fund, the BOCC2, will merge. They have just announced it's happening. Nobody got to vote on it. They're the manager. They're manager of the fund, okay? They're the general partner. They control the day-to-day business in these joint ventures. So we're going to merge into their larger publicly traded BDC vehicle, and that is Blue Owl Capital Corporation, OBDC, which has $17 billion in assets. And Meta, okay, we know they own a 20% stake in this joint venture with Blue Owl, would pretty much be willing to bet that they own their 20% in the fund that has $17 billion of assets, right? But Blue Owl was out, took in $1 trillion, or excuse me, $1 billion. Throwing on trillions like it's nothing at all. So they took in $1 billion from retail wealth investors, all right? And now what's happening is the BOCC2 investors will be required, okay, no option, to exchange their shares for shares in the Blue Owl Capital Corporation, the main entity, OBDC, okay, at net asset value. But listen to this, OBDC is currently trading at a 20% discount to NAV. So effectively, BOCC2 shareholders stand to suffer a 20% immediate loss if the deal goes ahead at current values. And here's the real kicker, guys. BOCC2 will suspend redemptions until the merger closes. That's expected. It's expected to be sometime in early 2026. After the merger, investors will no longer have the right to redeem at net asset value as they did in the BOCC2 structure. So basically what these private investors bought into, $1 billion worth, the rules of the game have now changed. The pawns on the chessboard have been shifted. The entities are merging, and those that put into the BOCC2 fund are basically getting screwed, okay? Because they don't have a choice. If they don't accept the deal, then they don't get anything. If they do, they've got to take basically the write down of the loss, because the larger fund is trading at a 20% discount. All right. And why is this happening? And what's happening is everyone's running for the exits. So as Wall Street and Main Street are pumping up, all of this AI build out, private credit, investors behind the scenes have lost and are starting to lose confidence. I've been sharing that on story after story in the recent shows. The BOCC2, okay, the $1 billion fund, has faced rising redemption pressures. In 2025 alone, about $150 million was redeemed from it, which means they had to find $150 million to pay back to investors who said, we want out. The private credit BDC market is trading with a discount to NAV. The public vehicle OBDC reflects this by trading at a discount, okay? Merging a closed redemption BOCC2 into a tradable but discounted public vehicle is a way for Blue Owl to do what? Resolve liquidity / redemption strain. So they pigeonhole their investors in the smaller fund. The move signals, and here's the thing you got to pay attention to, because we're going to start seeing redemption on all these private credit funds as they blow up. The move signals the challenges for investors in credit funds and illiquid vehicles, limited liquidity, valuation risk, and possible forced structural changes by the managers. And that's what's happening. But again, the investors, the fine print basically says in these funds that you don't have any rights. Okay, you are a limited partner, okay, or a joint venture limited part. You don't have any management or control rights. All right. So redemptions, is going to continue to take center stage. Please keep an eye on this. The fund, BOCC2, originally as structured, allowed redemptions. But what happened? Too many people were running for the exit doors and trying to redeem. And then when redemption pressures got large, the manager, okay, which they did in this case, the manager Blue Owl, they suspend redemptions, they merge into another vehicle, they force you, the investor, into a structure with no redemption rights at all, okay, or force you to lock in your capital for a lot longer than you thought you were locking it in when you got into the initial fund, okay, and exposes these investors to discounts that they didn't even bargain for, okay, when they put in their initial position. And that's what happened here with Blue Owl. The investors attempted to redeem. It put pressure on Blue Owl. They blocked redemptions, and then they forced, okay, them into a vehicle, the BODC fund, at a discount. So it's like a double whammy, all right? So what it kind of, I'll wrap this up pretty quickly, but what it shows is the illiquidity in these vehicles and in this private credit market. I've been sharing it for weeks now, okay? These are highly illiquid. Look what happened if you even take it out of the AI sector, go back to, First Brands and Tricolor, okay? They were based upon disastrous collateral, okay? And there was no liquidity. So when you invest in something like this, again, you may not even be directly, a wealthy individual or wealthy family investing in these kind of vehicles. But guess what? Your monies through your pension funds are invested indirectly. How about life insurance companies that are investing, your premiums into, and the health of your policy and eventual ability to pay a claim into these vehicles. So we're going to keep a watch on what's going on with redemptions, tuck that away. But as an opening salvo, we got these investors taking a 20% haircut on this one fund alone. All right, but they're out mainstream and Wall Street touting the partnership with Blue Owl and Meta on data centers. So, guys, it's gonna be something for the ages when this starts unwinding rapidly. Thanks for watching. Appreciate if you guys like the content or enjoy the content. Leave me a like. Subscribe to the channel if you're not subscribed. Leave your thoughts and comments. I love to read those. And with that being said, I'll talk to you soon. Bye.